Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Let me just show you something here real quick. This is the dollar index. And over this dollar index, I'm going to overlay the YUK. And when I'm using e-signal charting, that's $sign YUK. And what I'll do is I'll go ahead and put this in black and white. Just bear with me a moment. There you go. So here is the overlay of the U.S. dollar index and the YUK, okay? And if you take a look here, right now the YUK isn't necessarily tracking with the dollar index. No, this is where I love playing with the YUK right now because it's tracking tremendously with the Dow. Now you get good correlation between, typically between the Dow and the dollar yen. Again, I'm going to utilize the YUK symbol when I'm going to be using the ISE FX options. Now notice, it's not necessarily to scale. In other words, I know that the movement in the Dow, down or up, is not necessarily going to move the YUK equally, but what I'm looking for is the sympathetic correlation. When the Dow heads up, I want to see this YUK do the same. When the Dow heads down, I want to see the YUK again move in sympathy. Now I'm going to overlay the YUK now with the dollar yen spot, and do you see this correlation now? Now what I want you to see is when I'm looking at the YUK and when I'm looking at the dollar yen, again this is the spot overlaid with the symbol for the dollar yen FX symbol on the ISE, and notice how it just shadows. So when I see the yen move into a range-bound action, I'm going to show you right now on the 30-minute chart of the dollar yen and the YUK together, when we start getting quiet, this type of range-bound action, you can see here on the intraday 30-minute chart. Because what's happening with the Dow right now? The Dow is basically moving between negative and positive, if you guys have been watching it today at all, moving between negative and positive as it basically gyrates through whether or not we're going to get any kind of cooperation from the House, whether we're going to get cooperation from the Senate for this bill, which I believe they're calling TARP. If I'm not mistaken, this bill is going to be called TARP. Interesting little name, isn't it? So I'm not going to get involved in the conversation of whether or not the government should be. I hate the word bailout because that's not really what the whole exercise here is. But are we going to try to stabilize the credit market, add liquidity into the system, and get the banks to free up funds? Here's the great thing about being a trader. Regardless of what they do, there's been volatility in the market. And it's this volatility that's made the options trading so powerful. But you have to understand when to buy. The timing matters, especially in an option. So let's talk about this. Right now, with the sideways market, and I mentioned the market cycles at the top of our presentation here, price action and market cycles. Again, in the most rudimentary way, my preference for buying options, my options shopping approach is going to begin with a sideways, as neutral as possible, or range-bound market. It could be accumulation or it could be distribution, but I'm looking for that sideways market in particular in order to look for an opportunity to take advantage of either buying a put or buying a call. Now let's go ahead and utilize this ISE website here, and I'm going to pull up the YUK here at the site. Okay, and there you go. Now whether you want to look at the historical volatility and the mean or not, let's just clear this chart up for our purposes here. And I'll just pull up, say, a 6-month look, okay? And we can see here the puts and calls. You obviously know with October, very clearly marked, 16 days to expiration. Let's talk about expiration for a moment, and let's talk about what month I'm going to be looking at. Now, I just looked at a 30-minute chart, right? So would an October call or put, depending upon what we're finally going to determine we want to buy, could a 16 days to expiration be sufficient when I'm looking at an intraday chart as short-term as a 30-minute? Absolutely. Absolutely. October will be fine. But what if I were to pull out to, let's say, the Euro-US dollar? Okay, and I'm going to overlay with that the EUI, because I want you to understand, if you are currently trading spot, I want you to understand how you can take advantage of the movement, all right? And let me put in the symbol right, that would help. I want you to understand how you can take advantage of the movement on the spot, but then determine whether the environment is right for employing an option in its place. And again, already, what do I know? I want to be looking for those sideways market cycles. So here on the Euro-US dollar, I will tell you, just 3 sessions ago was the time that I know that we were shopping, and I call it option shopping. And let me define a little bit what I mean. Every trader should seek to do one thing and one thing only when it comes to their trading. Look to simplify. Look to simplify your trading. Look to simplify your approach. Have a complete understanding of what the vehicle is that you're trading and how it moves in response to the different market forces around it. When it comes to the Forex market, whether I'm looking at spot or whether I'm looking at an option, I'm going to be keeping an eye on the dollar index. I'm going to be keeping an eye on the Dow. I'm going to be keeping an eye on gold and crude. Those are what I call the Forex market pulse. So knowing the kind of volatility we've seen in the dollar with the rally over the past few sessions, knowing what I've been seeing with the Dow, immediately we looked at 2 of the symbols that I'll be trying to capitalize with movement on the dollar, movement on the Dow, the dollar yen and the YUK symbol, and the Euro-US dollar here and the EUI. Now, take a look here at this particular chart. Okay, this is the Euro and this is the EUI. Now, I wanted to show you this chart. When the U.S. dollar, speaking from the spot, when the U.S. dollar is the base currency, in other words, the first currency, you're going to see the sympathetic movement between your spot chart and the ISE FX symbol. But when the U.S. dollar is the second currency, as in the Euro-US dollar, and in the cable, the British pound U.S. dollar, or the Aussie, or the Kiwi, you're going to see this kind of inverse relationship. So I want to make sure you understand, depending upon the underlying spot symbol, you get an idea of the movement on the EUI. And again, the EUI here, the FX symbol, FX option symbol, is in the black and white. Okay, so when my Euro-US dollar spot is heading down, you can see here the color, my black and white, the chart of the EUI, is moving up higher. So understand how to capitalize on the underlying weakness of the Euro-US dollar and how that would translate to actually a call on my EUI. Let's pull the EUI up here. And again, if I'm looking at a daily chart here of the EUI, what kind of expiration do I want? Well, 16 days may not suffice. For me, I'd rather pay up a little bit in terms of expiration. I'd rather give myself a little bit more time. Look at a DEES or even a March of 09 contract. Okay? Give myself the time, but position myself a little further away from the current market.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.